following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 23rd, terrific Tuesday edition of the opening bell on the Trader's Edge. I'll get my faculties all set. I'm your host, Steve Perseverance Rhodes, and I know that we should always be pioneers of our future versus prisoners of our past. So as we begin our day, let's always remember that life happens for us, not to us. When we make that one little shift, and change those words that life happens for us versus to us, it'll make all the difference in the world. Make sure that you pass that along to all the friends and family that you might see over the next course of the next week or so out there, because it could change somebody's world out there. Because if you can do that, folks, here's the deal. You can find a gift. That's right. This is about the gift-giving season, isn't it? You can find the gift in every set of circumstance. That's a beautiful thing. Now, of course, if you're trying to create a breakthrough out there, always remember there's three steps to creating any breakthrough. Number one, you've got to change your strategy. Because, hey, let's face it, if your existing strategy was working, you'd already have broken through. Number two, you've got to change your story. Got to realize that behind that strategy you're using, there's a story out there. You got to change that story. Number three, you've got to change your state. How do you do that? That's pretty easy. Just simply stand up tall, sit back in the chair, take a nice deep breath out there. You don't have to use drugs. You don't have to use alcohol. You can change your state in a heartbeat out there. Hope everyone out there had a magical Monday. I know I did. And let's always remember we should be make sure that we focus on having an extraordinary day. Of course, I am grateful for your presence here this morning. I'm here to serve you, and I'd love to hear from you as well. So give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, it's TFNN. I'm Steve Rhodes. Welcome to the show right now. We got Dow Futures. They're trading up 86 points. How about that? They're trading out at 17,983 at 983. S&P Futures up nearly about 11 points. They're trading out at 2,083 and a bit of change. We've got NASDAQ Futures up 17 points, trading out at 4,309. The King is on the move, up 300 ticks right now, trading out at $90.25. We've got movement in the currency world out here. We've got the pound breaking through that hammer candle out there. I think of it consolidating at its lows, I believe, yesterday. We'll take a look at the pound out there. Broke below that. The euro is off of the bottom. It had pulled back much further this morning, so we'll take a look at that for sure. Goldilocks off $3. Having a down day as expected, as we discussed yesterday, with gold having failed that breakout pattern out there. We'll take a look at that. Silver's up 2 pennies right now. Light sweet crude is flat. She's trading out at $55.34. A quick peek across the globe out here. We're going to find over in Europe. We've got the DAX. The DAX is up 42 points. Not a big deal. Under 0.5% to the upside. We've got the FTSE up 0.3%. That's up 20 points. She's trading at 65.96. A mixed bag over in Asia last night. Nikkei up 13 points. We'll call that a flat. I think the Nikkei was closed, because I think it was up 13 points the day before. So maybe I could be wrong, but I seem to remember it being up 13. The Hang Seng, though, off 74. The Shanghai down 99 points. 99 points. That was off 3% last night. Let's go peek in on the Shanghai out here, see what the heck it was doing. Interesting. So here the Shanghai, which has been on fire. We're looking at a daily chart if you're watching us on TFNN, TigerTV out there. I hope you are, because you can see these charts in HD. So the trading session here inside of the Shanghai, that's December 22nd. That's the trading session before. A little doji candle out there. Had some decent volume, but as the Japanese say, yesterday's action, last night's, this morning's action here, we saw the leaves fall off of the tree out here. So that is a bearish reversal signal that we've got. There's your evening star pattern. So the question is, was it completing any other kind of pattern out here? Let's just take a look at the short-term expansion of swing points out there. Yeah, so it makes a 1.272 expansion. That was at 33.20 would have been that number. That's just simply the expansion, believe it or not, of the high from December 9th to the low of December the 10th out there. So that was one expansion. Let's see, what else do we have out here? A to B equals CD patterns. Let's take a look at this one. Let's see what it actually formed out here. That pattern, we'd use the low out here on the, whoops, let me get rid of that. Let's use the low out here, the trading session of October 27th. That's going to be our A point. There we go. Our B point looks like probably right up here, November the 13th, and a C point down here on November the 20th. So it made more than a 1 to 1.2, 1 to 2.618. So it looks like it did the old pie out here. Let's go see if it actually made a, which is a really stretched pattern. And if we go take a look at this, is a daily chart again that we are looking at. So let me go fill that in. It should have a 0. There we go. Feb level. So we'll put in 3.1. What is it? 3.1415. Does that sound like it? Hey, let's leave it as orange out there. Let's do that. Yeah, there we go. There's the orange. So that's what it made. It made a 1 to pi A to B equals C. We got a reversal. So what is likely to happen out here? What I would do is just simply take a look at just that C to D leg. Now, it's still a strong leg. I don't think that this move is over, but it does look like perhaps a retracement underway. And if we take a look at where that retracement, the likely spot for that retracement says that you see the Shanghai pull back to at least 3,043. That's your .382 retracement of just that C to D leg. Potentially even 2856 out there. So that is what's going on with it. Of course, you want to know what's going on with our markets out here. So let's go take a look at the let's go look at the Dow futures. Let's take a look at the daily contract out here. You're trading out at 17,982. I believe that today is going to be the last significant thrust dollar-wise out here. That's the way that it should play out. That does not mean that I'm saying that the market doesn't continue to gradually move up through December 31st or just beyond that. But I think the big move should be over and done with today. And that does not mean we don't have much more upside action. In fact, I hope the heck we do. I want to see extraordinary market breadth inside the New York Stock Exchange out there, because that would bode really well for the 2015 year out there. So pull for a big market out there. And if you're short, no matter what, just make sure that you've got your stops in place out here. There are no signs to be short. There are no signs to be short that I can identify out here. There's not a single reversal candle. There's nada anything. In fact, if we take a look at the Dow futures out here, they could absolutely be set up in A to B equals CD to the upside. At A point, by the way, being down here from that trading session of October 15th, your B point being the high from December 5th, that's been taken out, and your C point down here on December 16th, your 1-to-1 on that, that's going to take you to, I got too many yellow things out here. Let me get rid of the retracement, the expansion. Let me do this here. There we go. Your 1-to-1 on that, by the way, would take you up to 19,142. I don't expect that we'll see that happen here right away, but that is where the Dow futures want to head to out there. So I don't see it. I do not see any signals here of being short. Of course, if we take a look at the summation, let's go take a look at the VIX yesterday. The VIX falling right back into a line. Where's the chart that I want to share with you? Probably this one right here. If we take a look at the volatility index, yesterday it did close below that 50-day exponential moving average. 1567, by the way, is the number there. You closed at 1525. She's fallen right back into the ranks out here. That's going to bode well for a market that can move sideways to higher today. And I expect a significant move higher. Whether we've seen it with the futures, I don't think so. I think we see a push. I would expect that we even close at the highs out there. Now, what kind of prognostication is that? Hey, it's my prognostication. That's what it is. If I take a look at this chart here, this is a beauty. I've shared this with you before. This is the volatility index, and this is using the Bollinger Band on it. The upper portion of the chart, that's the VIX index. The bottom portion of the chart is the S&P 500 out here. And what you'll notice is a great pattern. It is an extraordinary pattern because this is using a 50-to-1 deviation out here, 50-day period. And if we take a look at when the VIX breaks out to the upside of that Bollinger Band, really gets stretched, when it starts moving downward, when it really gets inside the Bollinger Band out here, what it does is it moves all the way down to the bottom. Now, what's that say? That says the market can continue to move higher. I suspect that's what we have that is going on here right now. We're below the 50-day, just simply on the exponential. We're back inside this Bollinger Band. We got back inside there with conviction. That was last Thursday on December the 18th. And what we should see is this move all the way back down to the bottom out here. That is the typical pattern that it follows. I would see no reason for this to not do the same. What does that say? That says don't be short this market. There is just simply no signals out here to be short this market as we speak right now on December the 23rd out here. Let's go back to the futures market. Let's go take a look at what's going on inside of the let's go look inside of the NASDAQ out here. The NASDAQ, this too could be setting up this too could be setting up an A to B equals C to E to the upside, but NASDAQ futures are a little bit weaker. In fact, you know what's better to take a look at, in my opinion, forget about, let's not look at the daily chart out here. Let's go look at the 5-hour energy chart out here. That's, of course, sponsored by Saratoga Bob inside our Tiger's Den. And, folks, if you have not test drove the Tiger's Den out there, come on over. You know, Hotel California, there's a lot of things that we've got here, and one of those is the Tiger's Den extraordinary group of this great peer group out there. And that's really what it's all about when you're trying to up your game. You want to make sure that you get with the best peer group, and TFNN has got that. So come on over, test drive the Tiger's Den for the next 30 days out here. And if we take a look at the 5-hour energy drink chart, that's the 300-minute chart, we'll see that it has, using one of our great tools out here. If we take a look at this, got several, right? We've got the Chapman wave notation on here, likely in a fifth wave. That would be E to the upside out here. You can see prices, can it go higher? Yeah, I got at least another F and G out there. And I meant that in the nice way, not the way that a lot of people use that F and I'm just talking F and G out there. That's a possibility. We can see, of course, it made a 6-wave count to the downside out here. Let me get my crosshair. This, again, is the NASDAQ that we're taking a look at. It's in a full-out bullish formation. In fact, we can see here, we mentioned yesterday, that little shooting star. That is a reversal candle. That is the opposite. That's the long-lost cousin of the hammer candle. Those happen at highs out there. Just because it happens, does that mean that it is a reversal signal? Absolutely, positively not. You do not trade just on candle signals. You do not just trade only on patterns out there. If you don't join the two, you are missing the marriage of a lifetime out there. You've got to do that, and I'd love to be able to teach you how to do that. In fact, I will teach you how to do it. In fact, I'm teaching folks how to do that right now, those folks that have signed up for my 7-week trading course out there. You know what we did, folks? We've been following the ES Mini, the 120-minute chart, since that November 22nd course out there. And it paid for the course 10 times over. But let me see. Course was $395. No, more than 10 times over. For maybe 12 or 13 times over already since November 22nd out there. So you can get into that course as well. Like the first 3-hour workshop, that was archived. Come on over to homepage at TFNN.com. Over on the left-hand side, you'll see a little up and down arrow. You can click on that. You can sign up for it. You get 3 hours of that. You got access to me by phone, by email, by Skype, you name it. If you need some assistance, I'm there for you. And we've got another January 9th, Friday, January 9th is going to be our follow-up 3-hour workshop out there. So come on over to the homepage at TFNN.com. We know about the NQ out here on the 5-hour chart as we speak right now. Price above any kind of resistance, that resistance of the shooting star, as well as resistance of our TAS market profiles out there as well. So things look well for today and tomorrow and Friday and next Monday and next Tuesday and next Wednesday and probably the Friday after that. This is Steve Rhodes from TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Traditionally at 727-445-1044.
Welcome back, folks. Let's take a tour around the currency markets out here. Let me go to the actual Euro-US dollar currency pair. It's got a 15-minute delay on it. We could look at the futures contract as well, but let's just look at the actual currency pair. Now, what we know out here is the daily chart. This is the weekly chart that we're looking at. Let me switch over to the daily. Well, as long as we're on the daily chart out here, talk about putting a 1 to, we were looking at what the Shanghai, I believe it was, the 1 to pi when it comes to the 1 to 3.148 to B equals CD. Looks like that's what we've got going on here inside of the euro. That gives us a price target somewhere right around the 1.2159 area. We'll call it 1.22. We're at 1.2182. Let's put this on a daily chart out here. What we know about the euro is, of course, this the as I say, the daily chart. We got all kinds of trend lines out here, and the euro simply just failed at one trend line. So as the euro was making its move higher out of the short-term trend, that's one coming off of the October 15th high. You can use as your next touch point October 29th, and we saw a breakout of that. That was on December 10th, and what's interesting is that breakout ran right into the trend top line out here, coming off of the high. Oh, come on, don't do this to me. Come on, stay with me. There we go. That was coming off of the July 14th high out there. That's another red line going on my screen out here. So now what we want to take a look at is, hey, where is it going? Where is the euro going? Well, if we take a look at A to B equals CD patterns, no reason for us not to, on the daily chart out here, your A point's going to be up here on October 15th. Your B point looks like that's the November 7th low, and your C point is going to be the November 19th high out there. Your 1-to-1 takes you to 121 as well. So you got 1.2, looks like about 1.207. Let me just do this here, make it a little bit easier, and just go ahead and add some more decimal points to decimals. Let's make this let's just make this 4 decimals out here. There we go. So now we've got the 1-to-1 is 1.2072. That is likely where the euro says. That's on the A to B equals CD scale out there. That's the Richter scale. If we take a look at a couple of different expansions of swing points, that happens to be a 1.618 expansion that would take us down there. Your 1.272 is at 1.21596, but I don't think that is where this thing says. That means more strength inside the U.S. dollar. If I take a look at expansions of this swing point out here, I think we get beyond where we're at. Yeah, we're well beyond that, so I'm not going to spend much time there. But it does look at this stage, until we see any kind of reversal, signal 1.2072 is the number out there. Why, I don't know. Why people have bought into Mario Draghi's quantitative speaking is just simply beyond me. Just simply beyond me out there. In any event, that's what's going on inside the euro. Let's look at the Great British Pound out here. Great British Pound, U.S. dollar, that is trading lower. Also this morning, this has broken through. We have been taking a look at this little congestion pattern out here. Of course, this hammer low has been important. That was from the trading session of November 14th. You're now clearly below that as we speak this morning. So where is this headed to? Well, let's just look at just the short A to B equals CD to the downside out here. Let's take a look at the swing point from November 27th is our A. Our B is December the 8th, and our C point is up here on the 16th. You've done the 1-to-1, A to B equals CD, but it wants lower price than that. So it looks like the euro is headed to the 1.5423 area as its next destination. Could head lower than that, but at a minimum, looks to me like that is what the Great British Pound wants to do. Let's take a look at the Japanese yen out here. That's trading out at 120.72 or somewhere right around there. This, of course, is a daily chart. She's just trying to make her way back into the swing point out here from December the 8th, the top of which is 121.84. That's what's going on with regard to your 3 primary currencies out there. Of course, that's going to impact the euro, Japanese yen. Let's go see what she is doing here. The euro, Japanese yen, this bodes well for the U.S. stock market. She's not trading lower, but of course she is not anywhere near the highs of December 8th in its stock chart. Of course, it's December 5th for the most part. In our stock indices. So it's moving higher. That bodes well for the next few days out there. We'll see what happens as price gets back up to the top. So that's what's going on inside the currency market. Let's go take a look at the commodities out here. Let's go look at light sweet crude, see if we've got any turnout here in light sweet crude. And the answer is, Johnny, is no, we do not. But of course, in light sweet crude, what we can see is you can see that price is trying to find support at its TAS market profile low, the support level, which is at 55.11. Is that where I believe it'll find support? Now, at this stage, I don't. I think the longer term, that quarterly chart that we look at, which is about the $50 area, is where Goldilocks is headed to as we speak right now. In lieu of any kind of reversal signal out there, that is where light sweet crude will head. There's our music. Although I thought we were going to just simply play the Quadrophenia album all day long out there. Hey, if my internet goes down, you can expect to hear that great album as our man Al Kazam in the control room. He'll spin those tunes, but otherwise, we'll be right back after this break, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate until you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 47 points, trading out above that 18,000 level at 18,006. S&P up 6 at 2,084. Composite up 9 points. She's trading at 47.90. Russell 2,000 up $3.50. Trading out at 12.05. DAX up 43. FTSE up 20 points. Goldilocks back $4. Silver up 3 pennies. Light sweet crude up 15 cents. Leading the charge to the upside, it's Google. They're up about $2.45. Vanda Pharmaceuticals up 20%, up $2 and change. GoPro up $2. Ambarella up $2 as well. Chesapeake Energy up $1.28. China Financial Online up $1.11. Boeing up $1.08 as we speak. To the downside, getting roasted this morning is Green Mountain Coffee Roasters. I'm not a coffee drinker, but I did see some message come across my screen earlier that they're recalling something. I don't know whether it was They're recalling something. They were afraid of not just the coffee burning, but something else out there. So they're down about 2% off 255. Celgene Corp, that's off $2 this morning. Zulily, ZU is the ticker symbol, off $2. Alibaba down $1.83. Southwestern Energy off about $1 as we speak right now. Again, their call number 877-927. 927. Oh, now I got it all messed up. Yeah, you know our call number. Just give me a call. Would love to hear from you. Okay, so we were beginning to, somebody put a quarter in that machine out there. We've got somebody on. We got a caller on the line, so we're going to wait before I go into, I was going to go take a look at gold and or silver, but while Alakazam is typing that magical name into the system, we got Ken from Sheridan, Wyoming. Ken, how you doing this morning?
Hey, great. How about yourself?
Excellent. Thanks so much for asking. You all set for the holidays?
You bet. I better be anyway.
Okay. All right. Well, that's right. That's what you got to say on the air. Now, Ken, what is that ticker symbol that you wanted to look at? Is it KMI?
Yes.
Okay. Tell us what you're doing, how I could be of assistance to you.
Well, I was lucky enough to get into this a week ago at 37.50.
Okay.
And I'm looking that it has a high volume high out here pretty close.
It does, yes.
And kind of wondering what I should do with it.
When you got into it, so back when you got into it a week ago, what was your plan then?
Well, my plan was to just see, I guess, look at the volume at this last high volume high.
Okay.
Decide what to do, actually.
It's got two of them. So there's really two highs out here that have got volume. I don't know which one you were looking at, but either one works. August 11th had 139 million shares, and the top of that was 42.49. And then you had another nice spike on November 26th that had 251 million shares, and that was out at 42.41. So you're trading at 41.87 right now. I would say there's no signs here that you should sell or cover, but do you have a sell order in?
I do not.
You do not. I would say you got a couple of different ways to play this. One, to lock in those profits, maybe at least a trailing stop. And that trailing stop could be, you got in last week, so you're somewhere below. I don't know if you said the price or not. You're about $39.50 or more, or
$37.50.
$37.50. Well, bless your heart. I'd at least have a stop underneath 40.68 at a minimum. I'd probably bracket the order and have a exit strategy, maybe around somewhere less than 42.49. Maybe it's 42.80, something like that. Another $1 above where you're at. Now, if price gets above that level. The tough thing's going to be for Kinder Morgan to go ahead and make a confirmed A to B equals CD pattern to the upside from a volume standpoint. That doesn't mean that if it gets above 42.49 that it's going to fail. I'm not saying that at all in the cards out here. But at this stage, we know that price has struggled each time that it's been up there. And so you just may want to have a sell order in place, in case you're not around your terminal. And then if price closes back above that, you might want to then reassess it, for a little bit longer term trade, because as far as where could this run to, let me pull this back. I think we're at all-time highs in this. I think that's the level. Yeah, so that's really also the level. So, obviously, could move higher, no question about that. But I think that's what I would do if you're asking, my opinion. Yeah. The other way to do it is to just keep moving your trailing stop up and not have a exit, at the 42.49 level and see if it can take that out. I think those would be two ways to play it. The question would be, which one would you be more comfortable with?
Yes. Well, that'll give me a little food for thought anyway. I'll look at this chart and do something anyway. I definitely need to put a stop in place. I do know that. So. Yeah,
just a protective stop, I think would be good. I would say that what the general market ought to do, Ken, is the general market overall ought to move higher, not just into the end of next Friday, but maybe for a week after that. 2 to 3 days to a week after that. So, this, now look, I wish I could control the market because then I'd give you the lottery numbers if I had them.
Perfect.
But what we do have is we have a version of the lottery numbers, which is just take a look at the typical chart pattern behavior out there. So I say, worst case, just have a trailing stop in and at a level that you are most comfortable with in saying, hey, if the market comes back to this and I've made this type of return, I'm good with it. And then you can assess the trade from that point forward.
All right. Well, very good. Well, listen, appreciate your time and have great holidays.
Our pleasure. Thanks so much for listening. The same to you. That was Ken in Sheridan, Wyoming. We were taking a look at Kinder Morgan. The ticker symbol out there is KMI. A nice trade out there. Nice trade for sure. In at about, I think we said about 37.50 and at 41.92 as we speak right now. I did say that we would go take a look at the Goldilocks and silver out here. So let's go take a look at the gold contract. Back about $2 as we speak right now. It does look to me like gold is, you'll see a lot of noise and activity on this chart. I don't want to erase this stuff, so I'm just going to go ahead and turn off some of the elements on here. So let me go ahead and turn off the Fibonacci retracements. There we go. Okay, so that's off. So as we take a look at this chart here and look for pattern clues, right? We're all here just trying to be, if we just simply do the best we can to be extraordinary pattern recognition experts. And you got to realize that pattern recognition is something we got to use in each of our everyday life out there. It doesn't just apply to the stock market. So that's why if we can get this down, that's why we took a look at that Kinder Morgan chart with Ken out there. We're just saying, hey, here's what it's done in the past. Does the past equal the future? It doesn't have to for you. But in a stock chart, it pretty much does, because for most people it does. For most people, you got to admit, they're locked into their past, and then their past equals their future. Now, in the case of past equals future inside of gold right now, what we know about Goldilocks is a couple of things. Number one, it failed at a breakout. When you fail to breakout, you get back inside it, and that's the trend line. That's kind of this yellow diagonalish, this red diagonalist line coming across my screen. It's not a good scene out there. It says it didn't have the energy to keep moving forward. So then what do you look at? You look for other patterns on the way back. Does it have to complete the pattern? Of course not. But what we can do is we can plan ahead of time. Remember the old strategy out there, right? You got to have a strategy. So the strategy here for gold is taking a look at A to B equals CD to the downside. Now your 1-to-1 pattern takes you to 1157. 1157 might be the spot where gold is moving to. It's only $20 to the downside out there. No big deal. Could easily do that over the course of the next several days. Does it have to? No, I don't have any control over this. What we also have down here is we've got our TAS market profile low. That's at 1152. I like that. That's kind of a nice little sweet spot out there. 1153, 1152, 1160, 1157, right around there. I mean, that gets maybe pretty sweet. But we'll have to see. We'll have to assess. The volume's going to likely be low. So, the volume piece of it right now, well, hey, volume's not low. What we do know is, guess what? It's going to go test the lows. Which lows are those? Hey, could be the November 7th low. Could get down to 1132. Could be that low from that volatile day at 1141. That was on December the 1st out there. We just have a target range for where gold is likely to trade to. Now, gold has this pattern here. We were noticing it yesterday, where something has got the thumb on the closes. Now, yesterday was gave way to that area, so I still expect to see some lower price inside of gold. We'll see how it plays out. But what it is not in any kind of bullish configuration. There is no bullish pattern that I can see on a daily chart. We could probably go down into, let's do it. We can go down into a 30-minute chart. We can go, or a 10-minute chart, even see if there's anything out here. But the question is, are you trading on a 10-minute chart or are you trading on a daily chart out there? And that's really the key. But if we take a look at a 10-minute chart, let's go see if we've got an A to B equals CD down pattern. So if you were an intraday trader, the AB, that's not going to work because that's not your A to B equals CD pattern out here. There we go. You've got to come all the way down. You've got to come all the way down. All the way down here. Yeah, so no. So your A to B, even on your 10-minute chart out here, it's probably going to end up at about the same thing, I would guess. Let me see. What's the price point that it gave us here? 1171. So even on a short-term chart, even on a 10-minute chart, it's just really confirming really what we saw yesterday. We don't see any type of even short-term pattern to the upside inside of Goldilocks. A little key reversal session right here. That took place between 9:30 and 9:40, but that alone, that's not a reversal out there. Anyways, that's what's going on inside of Goldilocks. Let's go take a look at silver, see what kind of patterns, if anything, we can see inside of silver. She's trading up 5 pennies as we speak right now, trading out at $15.50 $15.73. There we go. In the case of silver, also below the trend line, that being the green line to the downside out here. Now, in the case of silver, silver has not broken below the swing from December 16th. That low out there is $15.54. If it does, then silver will join along with gold. We'll go ahead and make an A to B equals CD to the downside. In the case of silver, that would give us a price projection of, come on. Well, I don't know if this thing's going to work. There we go. That would give us a price projection of about $14.85, maybe even $14.36 out there. But silver's first got to break $15.54. Closes below $15.54, you're looking at least $14.85 inside that silvery metal out there. All righty. Dow's up 54. S&P is up 5. Dow's still above the 18,000. Level at 18,015. If we go over to our longer-term chart, get an idea out here of where the Dow is headed to. Let's put this. This is where we're taking a look at our horizontal levels of support and resistance out here. We know about the Dow. This is the weekly chart, by the way, up on my screen. It'll pop up with those horizontal lines. What we know is that the Dow from last week came down to its daily horizontal trading range boundary line. That was at the 17,160 level. We're now above the daily. We're now above the weekly. We're now above the monthly horizontal trading range boundary line at 17,922. That's what those numbers are at. And this says the Dow could now easily target the 18,384, 18,500 level. Now, in this case here, I don't have any of the midpoints turned on. I'll go ahead and turn on the daily midpoint. That'll give us maybe a little bit better idea as to the next resting spot for Dow. So between now and next Friday would be what I would look at. Okay, so this would, wait a minute, something just changed when I did that. Why did that happen? Because it put more lines out there. Yeah, actually, this says, so we're at 18,019. This says we're looking for resistance probably around 18,124 to 18,165. So I would say that becomes our target area, at least our next target for the Dow. She's trading. And so if it closes above 18,000 today, that's expect that gravitational pull to the upside inside of the Dow. Let's go look at a few things that are moving and grooving in the marketplace here this morning. Dillard's to the upside, so they're not having a sale today. DDS is the ticker symbol, up $4. Let me see. Are they out with anything? No earnings announcements or anything. But let's go take a look at Dillard's. This is the daily chart. There you go, Dillard's. Just like we took a look at with Ken. And good eye, Ken, for spotting those high volume highs inside of Kinder Morgan. Dillard's also happens to have a high volume high out there, so no surprise that prices got back up to that level. 124.40 is the number out here. And what we've seen here this morning is a high of 123.83. Now, will it take that out? I don't know, but it's the reason why I suggested to Ken that he might want to put his exit strategy below the actual top of that high volume high out there. I'm not saying Dillard's is done. It's just a way of being able to try to maximize your trade potential out there. Don't put things where it's so logical that everybody else might have orders that are camping out up there. Have your entries a little bit above, maybe support your exits a little bit below resistance out there. I think that's the better strategy, because otherwise what you're telling the market is that you know exactly where the top tick is going to be. And if you can do that, man, come on to this show every day and let's just give people bags of money out there. Because that would be a beautiful thing. And in any event, now if we come back a little bit further to the left side of Dillard's, we can see that this area where it's trading into has been an area of resistance, most certainly. In fact, if you come back here, you've got a little, it's not a shooting star. It looks like a shooting star, smells like a shooting star, but ain't a shooting star. And that was from the trading session of August 5th, 2014 out here. So in this 125-ish type level, pretty significant resistance for Dillard's out there. Maybe you'll remind me, and next week we'll go take a look at it. Also to the upside, you've got Wynn Resorts. Haven't looked at Wynn Resorts for a while. WYNN. We might have to do that when we get back from this break, but let's take a quick peek out here. Hey, Wynn Resorts, nice little island reversal bottom. Son of a gun. We are going to take a look at Wynn Resorts when we get back out here, because it has the most bullish of patterns that you could ever want out here. Are you long Wynn Resorts? If you are, congratulations. You got an island bottom. So when we get back, we'll go take a look at it. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Now trading out 18,017. Composite struggling a bit, back $2. S&P is up 5. Let's go back and take a look at Wynn Resorts. This is kind of interesting. Hopefully you're following along with us on Tiger TV. If you're listening to radio, your mobile device at TFNN.mobi. Thanks so much for doing that. Don't forget you can catch the archive of this show on Channel 9. And we've got the monthly chart up on my screen first here. And so what's kind of interesting here, I'm going to type that in there. What's kind of interesting here is if you come back back to the March 2009 is where we're headed to. So I've got a little white diagonal line on my screen. In fact, let me just do this. Let me just kind of decorate the chart one thing at a time out here. It might make it a little bit easier. Okay, so now we've got a clean chart. In fact, we get rid of the moving averages too. There you go. Now we got a real super clean chart out here. Well, sort of super clean. So if you look at the trend line coming back from March 2009, the low, by the way, was $14.50. That's in Wynn Resorts. And then our next touch point out here is going to be the low of the trading session from July of 2012. That, by the way, was $90.11 out here. Price this month, the month of December, came down, cracked through that trend line, but thus far has rejected it. And the body of the candle is truly the essence of price out here. So this long-term trend line is still in place inside of Wynn Resorts. Now, if I go turn the monthly profiles back on our system, our TAS market profiles, we can see right now where Wynn Resorts is trading at. It's also at or near the bottom of that box out here, which is priced out at 150. What is it? 151.38 is the number, and you're trading really right on that as we speak right now. So that says, okay, also good support. Now, let's go take a look at Fibonacci numbers. Let me turn this off. I'll leave the trend line on here. I'll put the Fibonacci numbers. Now, that's just off our last set of swing points. That is the July swing point, the July 2012, to the high here in March of 2014. We can see that price is also at the 0.618 retracement level. Yeah, intra-session this month it had spiked down. It's back up above. It's really right on the 0.618 retracement level. 150.92 is the number. You're trading at 151.16. So that says on a monthly basis, okay, it looks like you should be at pretty good support. I'll switch this over to a weekly chart here for Wynn Resorts. If I take a look, I'm going to look for the candle. What kind of candle did it form last week? It sure looks like I got to take a closer look, but it almost looks like a weekly hammer candle. The question just simply becomes that wick out there. We'll give it the benefit of the doubt, knowing what it is that we know out here. And so you can also see that, price came down to that trend line. That was the week that began December 8th. Then last week we saw a push down, but then a rejection of that with the body closing above there. Pretty decent volume. What was that volume going against? Nothing of when it pushed down, it didn't push down into a swing point. It just stopped shy of that. But I would have to say now we know on the longer term charts there's some pretty decent support out here. So now if we switch over to the daily chart, let's turn a couple of these things off as well. Let's turn these trend lines off. Let's turn these Fibonacci numbers off. Here's the pattern. Here's the key. Well, when I say pattern, let me see. Did we even do an A to B equals CD? But that would even be more beautiful out here. It looks to me like we may not have, but let me turn that. I got to turn the tool back on. The A point for this pattern, your A point, at least the one I'm looking at right now, would be right up here. It looks like July of 2014. Here's our B point. Here's our C point out here. Oh my goodness, you did. So this thing does just slightly more than a 1-to-1 A to B equals CD, creates a hammer candle down at the bottom. That hammer candle is always a bit suspect because of the gap down. Let me turn that A to B equals CD. But it creates a hammer candle, and it creates an island reversal. Folks, here's the deal. If you were inclined to want to be long any of the gaming stocks out here, or specifically Wynn Resorts, you actually couldn't get a better signal than the ones that we just took a look at. Consider that to be a Christmas gift for you. I got no idea if it's got coal, but just use your stops. But it's a good trade. Hey, folks, have a terrific Tuesday. Stay tuned. Hour 2 of the Trader's Edge will be up next. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
watching Tiger TV.